Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Well, Yatin, the weakness continues, and for the week, Nifty is also down 0.5%. So this is now the fourth straight week that the markets have registered a weekly decline. And given that we had the third week of earnings season concluding, the likes of Infosys, Bajaj Finance and Shriram Finance, all of them disappointed the street too. And no real cheers emerged from the earnings too. So now the investors are more cautious on the valuations front. But yes, coming to the levels today, structural weakness that was prevalent throughout the day. Sensex plunged over 700 points and Nifty settled near its 1 month low around those 24,800 levels. But yes, apart from Nifty Pharma index, that saw some excitement due to good results that came in from Cipla. And yesterday we saw Dr. Reddy also coming out with its June quarter performance. All other sectors plunged into the negative territory. Nifty IT, Metal and Auto, these were the three indices which were the worst hit for the day. And broader into the markets, mid-cap and small-cap indices also remained quite depressed. But yes, India Wix up and about 5%. So some fear in the markets has emerged as the result season has been unfolding. So yes, Yatin, once again a dull week. Valuations are something that is getting questioned as the earnings growth so far remains low.
Absolutely, and I think ex-Geo Reliance earnings on the O2C segment and then IT results, especially TCS and then Wipro disappointed, the street, and probably the kind of cautious management commentary in the IT sector also led the markets falling and getting nervous. And obviously, we also have the India-US trade deal, which is still not yet struck, no progress there, and probably the markets are nervous ahead of that 1st August deadline as to what really happens to the India-US trade deal. So yes, multiple factors, earnings being one of the biggest reasons why the markets are now consolidating and now trading below that 25,000 mark on the Nifty.
That's right. But let's take some of the gainers and movers on the Nifty 50 front. Well, Cipla soaring in the trade with about 3% gains. We did see that the company report its June quarter results, which was beat on estimates itself. So yesterday we did see Dr. Reddy's also, and today we have Cipla coming out with its June quarter performance. So Dr. Reddy's once again doing well, up about it, up for the third straight day with about a % gain. Other than that, SBI Life also good numbers. Brokerages remain positive on the management's commentary for FY26 growth also, and that's where the stock did well, so with about 2% gains. Apollo Hospital and HDFC Life, they are also some of the gainers on the Nifty 50. However, on the way down, if we can see Bajaj Finance with about a 5% cut, we did see some stress in the MSME and the two-wheeler and the three-wheeler loan book, which made investors cautious as well. And some of the brokerages have also given out a reduced rating. We'll discuss their stock in detail later in the segment. But yes, 5% downtick coming in for Bajaj Finance as well. Other than that, we can see Indusind Bank ahead of its numbers on Monday, 2% downtick, 3% cut coming in for the private lender. Shriram Finance, another NBFC player, not doing well with about 3% cut. While the headline numbers were okay for the June quarter, but margins is where the street became nervous, and that's why we saw the stock coming down with about 3% decline. Bajaj Auto and Tech Mahindra, they were some of the gainers, losers on the Nifty 50 front. But yes, small cap and mid caps, they continue to be in the downward trajectory. Small caps definitely with a larger cut itself. But yes, Yatin, the shakers and movers there, what are you gathering?
So if you look at the mid-cap side of the market, again the advanced decline ratio today worsened. Yesterday it was 1:2 and today it turned almost 1:4. So, the advanced decline ratio was quite weak on the mid-cap index. And if you look at the broader, markets, the small cap index and the market aggregate put together, it was almost 1:10. So yes, a lot of profit taking in the broader end of the market. Movers and shakers, Phoenix Limited posts the numbers 5% higher. Gravita continues to move 4% higher for that stock. And Sirma SGS, that is one stock also in focus, 3% up for that stock. What did not do well post the numbers, Chennai Petro saw some profit taking, 9% down for that stock, and we had almost a $4 per barrel kind of a inventory loss, which led to weaker than expected numbers. Intellect Design Arena reacting to the numbers and management commentary down 10%. Apollo Pipes, which is APL Apollo, that stock moved 10% lower, along with MRPL also collapsing by nearly 7% in trade.
That is the thing that we're gathering from broader into the markets. Now, let's quickly break down some of the stocks that did grab limelight. We'll talk about Bajaj Finance first because that was the stock that contributed to heavy losses today, where the headline numbers were good, but rising credit cost and asset quality pressures was where the street became cautious today. Even the brokerages gave out a mixed verdict on the counter. We saw Jefferies coming out with a bullish take, but most of the other global brokerages, for instance, your JP Morgan, UBS, Macquarie, and Bernstein have either downgraded or they have reiterated a bearish call, highlighting the stress present in the MSME and the two-wheeler loan segments. Now, what JP Morgan has indicated that they expect a continued weakness in the two-wheeler and the three-wheeler loans, indicating the possibility of negative revisions from the street going from here on itself. And therefore, it expects Bajaj Finance re-rating to take a pause for a quarter or two. So, the upside could be limited from here on. That's what the brokerage has been indicating. On the other hand, if you look at UBS, they have given out a sell recommendation, and they were given out a target price of about, one of the lowest on the street itself. And what the brokerage believes is that the MSME segment continues to see stress, and any successor to Rajiv Jain will be announced closer to the end of his tenure in 2028. So that clears any of the near-term uncertainty that the markets might be anticipating. On the other hand, Macquarie also gave out an underperform call, and they believe that the stock is not factoring in the decline in growth guidance or even higher credit costs. And at the current valuations, most of the positives, be it the management's commentary of 24 to 25% loan growth, they've already been priced in. So yes, that was what majority of the brokerages have been saying as well. But Yatin, now we have two NBFCs which have disappointed street. First it was Bajaj Finance, and now Shriram Finance also down with about 3% cut.
Yes, and I think Bajaj Finance's commentary on the commercial vehicle and three-wheeler, two-wheeler business impacted not only Shriram Finance, but also, we had Chola Finance, which was down in trade. The management is expecting a slowdown in 13 out of the 17 sectors they track for the MSME business. So it's not only the commercial vehicle or the auto space, but also the MSME space wherein the stress could be higher, and hence we had the stock of not only Bajaj Finance but the entire NBFC pack was quite nervous after this commentary from Bajaj Finance.
That's right. All right, let's now get to the top gainer on the Nifty 50. That was your SBI Life, because that company delivered a stronger than expected performance for the June quarter, where we saw both the net premium income and net profit were in double digits, and brokerages also appreciated the quarterly performance. If you look at Jefferies, they maintained a buy call on the counter, and they upped the target price to about 2180 rupees, saying there is more room for margin growth from here on. In this quarter itself, the SBI Life saw margins expanding by about 60 basis points, and even the management guided for stronger margins going ahead, and that is what impressed Street too. Apart from that, given that insurance firms have been adjusting to surrender value norms and there is stability in terms of regulations, it is quite positive for insurance stocks and particularly for SBI Life too. Now, Morgan Stanley also gave out an overweight rating on the counter and said that the insurance player remains a top pick among its large cap NBFCs. So, Yatin, earlier we saw HDFC Life, which also benefited from its change in product mix towards more traditional products, shifting away from ULIPs. And now SBI Life also benefiting out of that product mix strategy shift.
Yes, and I think the guidance also for SBI Life was quite good. They expect the APE premium collection, to be on the mid-teen side, which was strong, in terms of the overall guidance with respect to other life insurance companies. Also, REC, this stock was in focus today after a strong set of earnings. Obviously, from the day's high, the stock gave up gains given the fact that the market was under pressure. But we have brokerages like CLSA, which have a high conviction outperformer call on the shares of REC with a target of 525. We also have Morgan Stanley, which believes that the shares can reach target price of 485. So brokerages are bullish. The stock valuation also is quite reasonable. And when it comes to the gross loan growth, it has been much better, much firmer, and the disbursements also have been quite strong. In fact, the first quarter earnings, according to CLSA, beat the expectations by nearly 4%, and also we had a surprise resolution of one of the power plants because of which the provisions for the quarter were negligible. and also if you look at the reversal, that aided the overall profit growth. So on the asset quality front, things are looking solid for REC. Obviously, earlier, at the start of the quarter, they had trimmed down their overall, guidance as to, the kind of loan disbursement that they can do for the financial year. But still, on the valuation perspective and the kind of growth that they can deliver in the second half, especially when the infra activity and the power activity pick up, could be substantial versus other, power sector NBFCs. So REC, one stock that is on focus of the brokerages.
That's right. The stock didn't perform well today, but however, a strong brokerage commentary coming in there, which implies another 30 plus upside for the company. But yes, that's all the stocks we have for today. Over the weekend, we will be seeing Kotak Mahindra Bank, which will be coming out with its quarterly performance. So we'll address those numbers next week itself. But for now, it's a wrap from Yatin and me. Have a nice weekend, and thank you for watching.